Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 4th of September. All right, now back online so we can start to tune up our charts. Now, just taking a look at where the currencies are, we've got the Aussie still sort of lingering to the downside. We had weak retail sales figures yesterday, but dollar China started to sort of chime in, really started to strengthen. I'll show you that in a minute, but that sort of pushed the Aussie back up and really squeezed the market. So the Aussie market would have been short after those retail sales figures and probably a little bit pissed off at the moment. Now, we do have the RBA coming up, so the Aussie is going to be major focus. And I'll come in and do a little bit of a preview of the RBA interest rate announcement. Well, there's no change in rates expected, but we could see a change in their statement. Kiwi, it's just getting clubbed to the downside. Everything tells me about the Kiwi that it's just going lower. The central bank is geared up to potentially be cutting rates, currency's weak, US dollar strength, et cetera, et cetera. Now, everyone's talking about the increase in tariffs on China. Now, we're not seeing any flow-on effect here into dollar yen. Okay, it's the natural safe haven play. So at the moment, the market doesn't seem to really give a toss, or they're waiting for more information. Now, on the other majors, euro. Well, we had that nice run to the top side, started to see it drift sideways, and now we're starting to see it give up some gains. So, it's only a tentative sort of move, but to me, it's breaking down the hourlies, and it's in no man's land. It could drift either way, but to me, the downside looks like more likely to go. Sterling, if you have a look from, say, the early 21st, 22nd of August, okay, it's trading sideways, but in a really big range, a couple 100-point range. And what we're seeing is, Brexit coming in and out. There was a good announcement from the EU Brexit negotiator saying they're going to work on some sort of deal, or they gave them a few options. The data's been coming in weak. So overall, sterling, don't get caught up in the technical side of things. Across the board, it is still trading sideways, even though on a short-term basis it has broken down and does look like it's ready for a much lower levels. And same with dollar CAD. There's a lot of geopolitical events impacting the CAD. You throw in a couple of weak bits of data and all of a sudden this has gone from sort of like a bearish outlook to very close. This is a pretty long-term sort of resistance line on the top here. It is breaking just above that. I can't see that being sustained in Asia, but the thing is, technically, dollar CAD's going up. We do have the Bank of Canada tomorrow, so I don't see it going too far. Now, inflation was like 3%, and their inflation band is between 1% and 2%. So we'll have to see what's going on with the Bank of Canada. With NAFTA hanging over it, they may do nothing, which is expected, but they could surprise us with a hike. But the way Trump's playing out that NAFTA, it's probably going to keep the central bank on watch. So coming back over here to the US dollar, right? So really start to focus in here and see what's going on. So you look across those major pairs and you see a lot of activity. Have a look at the dollar index. It's slowly clawed itself up off the floor and is starting to trade sideways again. It really desperately needs consistent data, either strong or weak, to get it moving up or down. Otherwise, we're just going to see this sideways movement at this stage. And with the various geopolitical events going on, it's probably hard to see it screaming to the top side unless we get something crazy out of the non-farm payrolls. All right, now this is the outlook here on dollar China. You can see it just keeps getting pushed down every time it gets back towards this resistance line. You've got to start to think that that's the PBOC, the People's Bank of China, the Central Bank of China. At the moment, there's nothing to really suggest you want to be buying yuan, right? And the tariffs haven't really impacted yet. It hasn't impacted the data. So I'm still thinking we're going to see more topside, but trading the correlation between the Aussie and the yuan is going to be a little bit tough. If you have a look at that correlation, let me just bring that up. You've got a situation here where the correlations are actually dropping. The market is becoming desensitized to the movements in the yuan. The Aussie, which was up around 80% last week, back down to 67%. Now you can sort of still argue that's reasonable correlation, and it's a negative correlation. But the it's lower. If anything, the Dow Jones is 77%. That's probably worth keeping an eye on there. So the fortunes of the yuan pretty much attached to the Dow Jones at this stage, and that's where it's sort of, for good reasons. It's, if the yuan increases or decreases, it's all about global growth, and equity markets are all about growth. Okay, so we'll just keep an eye on that as we go forward. Now, let's just have a look at the dollar. Now, one thing I was looking at last week, and this is how you got to understand how the media works. Right, they turn on panic buttons and all sorts of things. Look at the US yield curve. It has steepened again. Now, it's not massive, but it takes off the pressure slightly from where it was last week. And with that pressure off, funnily enough, the media, okay, they don't even mention it. Now, this was getting a lot of airtime last week and potentially sort of pointing towards a recession in the US. That seems to be off the cards. I mean, I can't remember the last time that people were calling for a recession one day and then everything's rosy the next. It doesn't make sense, right? This is the current geopolitical market we're dealing with at the moment. And when you come over here to look at the various bits of news, you've really got to take your time to piece it together. Now, the Forex news here, generally speaking, it's full of information about data, central banks, and currencies. If you have a look through this page at the moment, it's just full of rubbish. Okay, it's all geopolitical stuff. Sterling plunges versus euro as Brexit fears kick in. There's Lottie weakens. Turkish lira falls as inflation spikes. I mean, you've got Asian shares fall under pressure from trade, emerging markets, etc., etc. So there's a whole heap of crap here. I know it's a US holiday in Canada and the US Monday, so we do have a slow start, but this is where things are going to really pick up, and it's with the upcoming data, and there's plenty of it. So, but at the moment, the market, as you can see with this news page, is really desperate for like fundamental drivers. We're talking about economic data. We're talking about central banks. So with that in mind, the currencies are sort of just washing around. So don't get too caught up in what's going through the market just at the moment. Now, if you just come over to the MyFX Trading Hub and you want to follow where the action's going to be, well, the main thing is first of all, identifying what the trading conditions are. And the geopolitical events have been dominating for the last almost 2 weeks. Now, usually they come in and they drift off, and they come in and drift off. But at the moment, it's still lingering. So just be aware that, that there are events still out there. But let's just get into where the upcoming events are now. Tuesday, it's usually where traders switch on and really get focused on the key data that's coming out. If you have a look today, we've got the RBA interest rate decision and statement. Now, definitely no chance of a change in rates by the RBA. They've been completely boring, if anything, sort of with their heads in the sand the last probably last year. Now, things we just had some CapEx numbers which were weak. The retail sales figures are weak. And we've got this very strange I think it's the calm before the storm for the yuan. Now, the US have put the tariffs on China. We are waiting now I think Trump's just waiting for the clock to tick away to let those tariffs hit and then see the impact on the Chinese economy. That's what he's waiting for. So, and when he gets that, then he'll start, I think he will think China will come back to the table and start to talk some deals. But so the RBA has that hanging over it. When we come into the European session, you've got the UK construction PMI, the ISM manufacturing data. Now, this could give the US dollar a little bit of a kick. All it needs is a slight nudge, positive numbers, and we should see a bit more topside. And that's pretty much it for Tuesday. Then we come in for Wednesday. We've got loads more stuff coming out. Now, coming up, we've got the RBA. So let's just have a quick look at what we've got to expect here. And the first thing you want to really do is hone in on the technical side of things. Now, I've got, with the daily analysis snapshot, okay, just to give you a bit of a quick look through, you can see I've got Euro and Sterling sideways. Now, on the hourly charts, they have sort of broken through, but fundamentally and across the board, they aren't really going anywhere just yet. Okay, so don't get sort of blindsided and think, oh my God, the Sterling is 100 points lower. Yeah, it is, but still the longer term charts are a bit sideways, and the fundamentals, if anything, are slightly higher, bullish. The Aussie bearish, Kiwi bearish. Now, the US dollar on fundamentals alone, okay, it's bullish. Technically, short-term charts are up, but the rest of them are sideways. But you've got a bullish tone here on the US dollar. primarily just through the fundamentals from the central bank. And I've got dollar Swiss. Dollar Swiss is one of those odd ones. It's just trading sideways at the moment, but there's a very dead duck bounce, as we call it, in the Swissy, which suggests to me that this moving dollar in the US dollar up is a long way from really sticking into the market. Now, the RBA, they're not just focusing here on the sentiment here. Now, the central bank has been sideways for at least a year. The economic data, now I know we've had weak retail sales figures yesterday, but overall it's pretty balanced. If anything, it's just maybe tipping towards negative, but the technical outlook is definitely bearish. And that's why we've got a bearish signal here on the Aussie. If you come down, you can see the various components, the central bank outlook, sentiment sideways. The CapEx last week, weaker. Now that's a bit of a worry. But GDP was strong and unemployment figures were stronger. So overall, if you look at the key data, it's pretty sideways. This is what I like to sort of focus on is, you're looking at the technical side of things, very bearish at the moment. So that's going to be interesting to see how we go here. Now, if you want to get the focus on, this is where the central bank announcements, you can get the data at the same time the market does. The central banks post their statements the exact time, same everywhere. So even if you don't have Reuters Zenith or Bloomberg or anything else, you should have the RBA page up and just focus in on this. Now, one of the tricks is to get into this. Okay, have a look at the statement. Go into the previous statement and have a look at the last paragraph. This is where the action usually is. And they tell you, you go through a bit of intro, blah, 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 blah. A bit about China, a bit about local growth, housing. But this is where the last paragraph usually has the punch. Now, if there's any changes here, then that's where we're going to see a change in the value of the Aussie as well. I think there's potential for a change in sentiment. Once again, you just have a look at the previous 6 or 7 of those. They are very much the same. So it's pretty easy to work out if there has been a change in that sentiment. Now, when you come back to the charts, if I just flip back towards the majors here. Okay, so you're looking at the Aussie. I mean, it has got a little bit of weaker sentiment from current account balance figures, which were slightly weaker. They don't really have too much of an impact. The fact is, the Aussie is, at the moment, sort of just drifting sideways, but it's on a very, very short-term perspective. But overall, it is moving down on a number of different timeframes. So when you are looking at trading the numbers, you're going with the overall trend. If I come over here, have a look at the daily charts here, just to give you a bit of an idea. This is a very long-term chart. Now, if we get a sustained breakdown through that sort of 71, sort of 60s, 80 there, the Aussies in all sorts, it'll start looking very much like the Kiwi's going to look in a day or so, where it's down around 64 cents. Dollar yen on the dailies, sideways. And this is where I'm coming back. And if you have a look at a big, longer-term perspective, you can actually see Euro and sterling are just trading sideways through trend lines. They're not really doing too much at all. And dollar CAD has flipped back up into the range. If anything, it's very close to going bullish. One more sort of session, and it could be potentially a bullish signal across the board. But we do have the Bank of Canada, and that's the probably the one thing holding that back. All right, so that's where we are, guys. It's really time to focus in on where the major events are. As I said, the Aussie RBA interest rate announcement. Okay, the statement is going to be the key to that, and that's where the action is. Focus in on the pairs which have clear sentiment. All right, the Aussie, as I said, it's only a bearish technical perspective where the Kiwi is fundamentally and technically bearish, a much better opportunity. We've got a bit of a bullish situation on the US dollar, just fundamentally. Now, this doesn't take into consideration the various geopolitical events which do cloud things somewhat. And funnily enough, that's why we've got the cloud at the top. So just be aware, focus on the key pairs. And if you go into the daily analysis snapshot, if you go into the actual the detail, you'll start to find out where the best trades are. Now, this has got a good technical bearish outlook. What we're waiting for right now, we're waiting for the key picture here, and this is from the central bank, right? If they go bearish, then this thing will fall over, and we will have a nice trade to the downside. If they maintain their bullish stance, well, we may see the Aussie rally, but it's going to be short term because the market will be starting to really slam them. So you guys have no idea what you're doing. The economy's slowing down. China's hitting the wall, and you guys are actually saying rates are going up, which is what they've been doing. So it's going to be interesting to see how that plays out. But, let's just don't anticipate anything. Get your statement up. Get ready to have a look at it right on the time of release, and then make your trading decision around that. As I said, on the long-term perspective, right, this blue line, if I actually just come back to the dailies, I just want you to see how significant this is. Okay, you're going back to 2001. Okay, there we go. So it has already broken down there last week. It's around 71, sort of 89, 90, so around that sort of level. What we're looking for is a sustained break here. And you know what? This thing's going to open up to that next low down here at 68 cents. The Aussie has got huge potential. All we need is the RBA to chime in with some sort of dovish tone, and away it goes. All right, guys, that's it from me. Good to be back online, and let's see if we can make some money out of these markets. I'll see you in the trade zone. All the very best. Cheerio.